Hey, hey, there I am. And there you are.
Oh, there I am.
There you
now
are.
Now I hear me.
What's up? Welcome to the Blockument.
Welcome.
Crypto education through everyday conversation. My name's Nate Talbot, Executive Director of Detroit Blockchain Center. And across from me is...
Yes, I'm across from you today, not next to you.
Right.
I'm Ashlee Rose. I'm your everyday mother. I'm an online reseller, and I'm on a journey to figure out what in the heck is going on with all of this crypto, blockchain, and today oracles. What is all this about?
What is all this stuff about? And are we, you think you're learning anything?
Yeah, I'm definitely learning it, like too much, in fact. That's why there's so many questions.
Yeah, good.
Yeah.
We'll keep the questions coming, and you're going to be, I think you're pretty much at the intermediate level now. I don't think you're a beginner anymore. Yeah.
Oh, well, good for me, huh?
Yeah, good for you. Good for you. So I can leave the chair in a minute.
No.
You can take my spot.
Oh, no, I still have so much to learn.
Uh-oh, hold on. Hold on. So... For everybody listening, we are experimenting with some new tech on our end. So we are now live, broadcasting live on YouTube. Mm-hmm. So not only can you listen to us live from visiting theblockument.com, you can also tune into our YouTube channel, click subscribe, hit the bell, do all that good stuff. And whenever we go live, you'll get a notification.
Yep.
And then you can join the conversation there.
Yep. And I'm going live on my personal Facebook account.
All right. See, we're going live everywhere.
Yeah, we're just live everywhere. Also, I'd like to point out our lovely new shirts that we have. We've got uniforms.
We got uniforms now. The Blockument.
Yeah.
In full effect.
Yeah.
All right. So while we're live on YouTube, we're actually pre-recording this show.
Yes.
This is not our normal Sunday morning time, right?
No.
Which is why you don't see the breakfast bourbon.
Yes.
Breakfast bourbons are for the live shows.
Yeah, which
so
I'm real sad about, but whatever.
Right.
Get past it.
Well, there's next week. So let's get into when this show is happening. So if we want to throw up the mempool. And now, if you're listening, we're going to be reading from the mempool, but if you tune into like a YouTube and watch us live, you can actually see us do some of this stuff. So you can start doing it on your own.
Yes. Oh, no, that is very blurry.
Uh-oh. Well, it's all right, because I'm going to blow it up for you.
Okay, perfect.
So currently...
we are on block, it was at 806,899, is that correct?
That is it. And here is the block information. Once you click on that, I'll just readjust stuff so you can read it.
The block size is 1.73 megabytes. I don't know how many that is because it's up on the more top in like the purple section. We're working through it. 4,262 transactions.
That's right.
All right. And the total subsidies and fees that were won on this block are 6.507 Bitcoin, which is comprised of 168,393 US dollars.
I think that's 95, but close enough.
Oh, that's a 95. And the miners that won that are F2 Pool.
F2 Pool.
Yes.
They are one of the big ones.
Yes.
All right, so that's the mempool. So if you ever want to check out the Bitcoin block space, you can go here, and that's how you read a block and figure out what's inside the block.
Yeah.
Or if you're using Ethereum, you can go to Etherscan. Bitcoiners will love I just said
Freudian
that.
slip.
But it was a slip. Etherscan, and you can see what's happening in the Ethereum block. And I think we're going to do that on an upcoming episode pretty soon, right?
Yep.
Covering how to read
Block Explorers.
Yep. So what are we talking about today?
Today, we are starting a bit of a series. It's real world assets. And then today is how do oracles work?
How do oracles work?
Yep.
All right. So this is going to be a 201 show. I can't remember exactly which show. I think we've touched on the topic of oracles before.
Yeah, I want to say that was when Rob was on.
That would be an early show. So if you go to theblockument.com, I'll put a link to a past show where we mention it. in the resources section that you can see on screen now if you're watching.
Probably the smart contracts one, I'd have to guess.
Yep, maybe. We'll figure it out, and then you can just click on the resources and listen to that show, plus other resources that we'll be talking about today. So today we'll get a little bit more in-depth because we're talking 201 stuff. Because we're talking about how do oracles work. But before we get into that, I would love for you to inform all of us what our oracles work.
Okay.
What are oracles?
Okay. My understanding of what they are is that it connects blockchains to the information from the outside world.
Correct.
Okay, perfect. Whew.
And that's why you're 201 level. I told you we're intermediary now. You're not a beginner anymore.
Yes.
You are fully
equipped.
fully in there. Right. So talking about the outside world, one of the biggest things you'll hear people talk about when they talk about blockchain, right, and what the potential uses are for any kind of blockchain network are the ability to do things like real estate, right?
Yeah.
Be able to do real estate on Ethereum or through NFTs and things like that, or tracking insurance claims, anything you want to do with the real world, even the stock market, even tracking actual stock market prices and whatnot, and running that, all on chain. There's a fundamental difficulty with oracles, right? And it's understanding how the nature of blockchain networks or distributed networks really in general just work. And that big problem is you take something like Bitcoin, right? Ethereum is also the same way. Any layer one blockchain, right?
Okay.
You have these coins that we're always talking about, the Bitcoin or the ETH token or a Monero token, a Litecoin token, all these layer one chain coins. Where do they come from?
The blockchain?
Exactly. Right? They're born in and of the network itself, right?
Yeah.
And this is why it can be trustless, because you don't have to trust some third party that there's this many, right?
You can
Bitcoin.
look and see it.
We can just go to a block explorer like we just did, and we can track any group of coins back to their birth. So we know exactly when they were created. Unlike now, right, with the fiat system we have, with the Federal Reserve, with the Treasury, when they want to create dollars, they just update a spreadsheet.
Yeah.
And they don't really tell us too many details around that, right?
We don't really get to see their spreadsheets.
We don't get to see the spreadsheet, right? We just know they're printing and printing and printing because we know what the total supply is.
Right.
But like with your bank account, if you think you have $1,000 in your bank account, how do you know you actually have the $1,000 in your bank account?
Yeah.
Because the bank tells you so. But if you're like, all right, cool, let me walk in the bank and look at my $1,000, they're like, nah.
Not
right?
today. Not never.
not ever. And that's one of the fundamental issues. This is why Bitcoin, one of the key reasons Bitcoin is created, is why Ethereum is created, that transparency in the system, right?
Yeah.
But it's only trustless because we can see all of it.
Right.
So now you want to do real world assets. RWAs is the current name. If you've been around for a while, you might have heard it called tokenization, right? And we'll probably hear several new words for it in the upcoming future.
So the old name was tokenization. The new name is RWA.
Yeah, they would call it like tokenized assets. We want to tokenize it.
Oh, yeah.
Right? Now it's more real world assets. So it's like, well, how do I do that? If I want to track gold, right? I have a gold supply, physical gold, but I want to digitize it and be able to make it more portable.
Yeah.
Right? By having a digital asset. How do you verify what the real gold supply is? I know what the blockchain tells me, right?
Yeah.
The blockchain says there's, 10,000 ounces in this warehouse or in this safe someplace.
Yeah, you would think that somebody would have to data input
That's
every
the problem.
moment by moment.
Always has to data input. So we're right back to trusting somebody, right?
Yep.
Same thing when you hear one of the use cases is supply chains. Oh man, we can track these cool new shirts we got, right?
Yeah.
I want to track them from the time they're woven together,
Yeah.
through the printing process, through my front door.
Right.
Right? And we can use the blockchain to do it. Now you don't have to trust anybody. It's like, yes, I do, because just because the blockchain, how does the blockchain know that the shirt's been wove?
Right.
How does the blockchain know it's been printed?
Right.
Somebody has to tell the blockchain.
Yeah.
How do we trust those people?
Right.
See?
Yeah.
So it just becomes this huge sort of issue, and this is called sort of the Oracle problem. So when you talk about how oracles work,
Yeah.
you're really addressing, well, how do I get this off-chain information on-chain in a trustless way?
Yeah.
Right? And ideally, a permissionless way as well.
And so what's the answer?
Well, it wouldn't be called a Oracle problem if there was a hard run answer. Right?
Oh, man, that's a real, conundrum.
It is. And so this is what we sort of are dealing with now. And so what we do is there are places, people have probably heard of like Chainlink, and that's probably what we'll be using as the golden child of these shows right now, of the oracles. And what their approach is, some alternate approaches, and how they all work, right? Mm-hmm. And then once you understand the generals of how it works, then you can start to maybe think around how they really work.
Yeah, let's see. We'll test that.
You're with me right now, though, right?
Yes.
Okay. I'm just also trying to monitor the YouTube just in case.
Yeah, someone gets the question.
If you come through on the YouTube live, I'm trying to pull it up now so we can answer any questions you have. I don't know if you can pull it up. I'm still trying to learn how to work all this. So when we do go live, all right, there we go. There's the comments piece.
Oh, cool.
So no comments found, but that's because we haven't told anybody we're actually doing this.
Yeah,
but if you stumble across
we didn't
us,
tell anybody.
If you stumble across this right now, then I should see it and we'll respond.
Yeah, if you have any questions, ask us and we can see about answering them.
That's right. So we have Chainlink.
Yes.
Chainlink is one of the most popular, I don't know really what to call them. There is a Chainlink organization. It's building itself up to be a decentralized network in and of itself. It's built on the Ethereum core network, but they also have their own feeds to other chains, or they're working on those.
Well, what do they do?
So what they do is, let's take an example of some real world data, right? One of the first ways people would use real world data is through betting, right? People like to bet. We like to gamble on everything.
Yeah, I wrote that down as a possible use.
Right. And so coming up next year here in the U.S., you have the elections coming.
Yeah.
And so maybe you want to start placing bets on who is going to be the nominee.
Yeah.
Then you want to place some other bets on who's going to actually win the election, right? And you want to do this in the most decentralized peer-to-peer way possible, right?
Yeah.
And so there are platforms out there that'll be like, all right, place your bet. Like, all right, right now it's looking like it's going to be a repeat of Biden versus Trump, right? Because everybody's two favorite people.
Yeah. Hate them or love them, they're your favorite.
Right. So you put them on, and I'm going to bet that Trump wins. You're going to bet that Biden wins, right?
Sure.
Just because. And we do it on some on-chain betting pool. How does the chain know who wins to pay out? We've put our money in.
Right.
We're going to bet each other 2 ETH, right? So I put my 2 ETH up, you put your 2 ETH up. Now it's sitting in a smart contract, right? So it's committed. How does the chain know who won without somebody telling it? How do you know you're going to get all 4 ETH if you're right without somebody intervening?
I don't know. I mean, I would say like a smart contract, but then the smart contract needs that outside information.
hence the oracle.
Yeah.
This is where an oracle will come in. So what Chainlink, someplace like Chainlink would do, is what they would port with multiple reporting agencies, right? Maybe they'll have something with all the major news organizations, several major newspapers, like an AP, Wire, all these different sources.
Yeah.
And they'll just sit there and listen all the time, right? So who's the winner? Who's the winner? Who's the winner?
Like,
smart contract
like an
just doesn't call
AI
out.
reading this kind of thing?
Well, it's not AI. Like, eventually we could probably tie AI into this, but it's just the smart contract. It's just sitting here listening. So the Chainlink, what the function that Chainlink provides is it's doing the listening. So every so often, it's just doing a call. Who's the current president? All right, not it. Who's the current president? All right, not it. Who's the current? Oh, we got a winner.
Yeah.
And then it confirms that on a majority win basis, right? So most of these feeds are reporting that Trump wins the election.
Yeah, it would have had a real rough time this last election.
Yeah. Well, yeah, depending on how they report, right? Again, these all sort of tie into some of the Oracle
That's
properties.
that's kind of like what I'm thinking is like some of them were reporting that one and some of them were reporting that the other one. So I feel like even that within itself is still going to be a problem. Yeah.
Exactly. So you can correct for some of these by building latency into it, right? So I can say, well, I want the reporting, but it won't do a payout until it's been a consistent reporting for 12 hours.
Kind of like block confirmations.
Or 1 week of confirmations with the exact same winner. The exact same winner has to come in X amount of blocks in a row, right?
Yeah.
In order for it to count as a win. And that way you can do all that. But now that introduces a new problem.
Yeah, like what if they never get that?
Well, maybe they'll get that, but that's for betting, and that's for something where it's like it's not very time sensitive.
Yeah.
But now another huge thing in the crypto world is DeFi, right? So you have all these decentralized exchanges and DEXs, and we definitely have a couple shows where we talk about DEXs and how decentralized exchanges work. So go check out one of those past episodes if you don't know what I'm talking about. But in short, right, it's a way to do Coinbase to buy and sell crypto without having to use a centralized exchange.
Right.
Well, if you get on the exchange and you want to purchase some ETH for some Litecoin, you got some Litecoin, you want to convert it over, and you want to use something like a Thor chain or something, it will allow you to do these L1 chain swaps. Well, how does Thorchain know what the right amount of Litecoin to charge you for that equivalent ETH?
Yeah, like what ratio?
Yeah, how much? What's the current exchange rate?
Yep. Yeah.
And so again, that it's going to feed out to several different major exchanges, probably plus some like some CoinMarketCap, CoinGecko, Coinbase, Binance. It's going to feed for all these different sources
and like take
to
an
see
average.
and it'll take the average price, and that's going to be your exchange price, right? But you want to do the trade, you want to do it right now.
Yeah.
What if one of the exchanges or all the exchanges, right, have some kind of bug? We've seen that where like the price of any token will jump up.
Yeah, and then you can like an arbitrage,
or drop right down. It could just be a feed error. It's not that it actually happened.
Right.
It's just a feed error, right? But
and that would sway the price of the average one way or the other.
Right, because if you're not careful, how decentralized are those sources you're looking at, right? If you're pulling in a source from CoinMarketCap, CoinGecko, Coinbase, and Binance, right? But CoinMarketCap and CoinGecko themselves are only feeding in from Coinbase.
Oh,
right?
Yeah.
And then Coinbase has some dip in price. 3 out of the 4
now have
Oracle
dipped.
Sources are going to call a dip that never really happened.
Right.
And now your price gets boosted up or dropped down or
right.
lost, and you lose all your fees, or if you're trying to do some kind of, if you're doing a short or a long, or if you have some kind of leverage position, maybe you have a loan out.
Yeah.
Right? Maybe you're doing crypto lending.
Yeah.
Well, how does the crypto lending like Aave, how does a protocol like that know what the price is to make sure you're not over or under collateralized?
Right.
It's depending on these oracles.
So those are like pretty big deals, because if it's too low of a price, then too high of a price or too low, you could be liquidated
Yep.
from your loan.
Yeah.
And that's kind of a big deal.
That's kind of a big deal.
Yeah.
But sometimes you're doing arbitrage situations and you need fraction of a second dependency.
Yeah.
So it's already taken fractions of a second for a protocol like Aave to do a call to Chainlink, right?
Yeah.
Then it's taken more fractions of a second for a protocol like Chainlink to hit each one of the sources it's pulling from. And that's just going out. Now it has to come back in 1 second, so maybe a second's gone by.
Yeah.
Maybe a lot more than a second's gone by, depending on how the networks are running and the demand and everything. But if you 1 second in trading and things like that,
yeah,
that's enough to like lose your ass.
Mm-hmm.
You know, you got to have microsecond swaps, and that's something that centralized services really provide well because they don't have to do all that. You're just trusting they're not screwing you over.
Yeah. And are there any other like ways people are doing this, or that's kind of the way that people who are like oracles, if they're doing this, that's
generally
the way they're doing
just the way they're doing it.
Oh.
And on top of that, it's like, all right, well, how decentralized is the oracle itself, right? So Chainlink, and again, this isn't about Chainlink per se. They're just the most well-used oracle system. There are several others, especially across different networks. Some protocols don't want to use them at all, and they build their own oracle. But now they have to have that whole set of problems themselves, right?
So is Chainlink is an oracle?
Chainlink is an oracle solution, yeah.
Oh, okay. And how would you use that?
So if you wanted to implement something like Chainlink, what you would do is you would have your protocol, you would connect with Chainlink, you would buy Link, the coin, and then you, for every request you're doing to Chainlink, you're going to pay in Link. So this is the sort of value prop of the Chainlink coin is you need the Link coin in order to pay for the data feeds and whatnot. So you would buy some Link.
Yeah.
You would have it stashed, and then if you're Aave protocol, then every time you're doing your smart contract needs to do a call out like, hey, I need to check the price or something.
Yeah.
You'd pay a little Link. It'll give you the feed, and you're there. That's it.
Interesting.
So like it's a very simple process theoretically.
Yeah.
Right, when you're just doing back of the napkin, but it's when you're looking at some of those details, like the latency becomes an issue. There's still trust issues because how many outside sources are enough? What outside sources are you using? If you're insurance, people want to put insurance on the blockchain, right? So instead of having to go back and forth with your insurance company every time you have a claim, it's like this incident happened, you get auto paid. You don't have to prove things.
Right.
But now, so what sources will the insurance company accept as those?
Right.
So does it have to have a plug-in to every police station and sheriff station and state trooper station on top of every auto shop, mechanic shop or whatever who's doing it, or at least the ones they do, a AAA link.
Yeah.
So they know when an accident happens, all right, an accident happened, I see a police report.
Yeah.
All right, this fix has happened at this cost, I see this AAA report or whoever's doing the repair report.
Yeah.
We see who was at fault, so who should and shouldn't pay out. But instead of them having to actually have an auditor come decide that, theoretically, it could be done on chain.
Well, I feel like that could almost go either like good in like the favor of like the customers of the insurance, or like dystopian that like they add all these little like asterisk and fine writing where if you don't meet all of these check boxes, then you don't get your insurance payout, and that kind of sucks.
Yeah. And that is, but that's the situation you're in now, right? With insurance company is there's all these check boxes. The problem with something like that an Oracle would solve isn't so much the checkbox problem. It's the changing the rules that I've already agreed to problem. Right?
Oh.
You got your insurance plan. They're like, it's this much for this coverage. And then halfway through the coverage time, they send you an email like, oh, we haven't updated terms. We're not covering this, that. We heard there's a fire tornado coming.
Yeah.
So we're not covering fire tornadoes anymore.
Yeah.
And now you're like, well, that's not what I agreed to. And they're like, well, you can cancel.
Yeah.
We'll keep what you gave us already. It's like, well, I can't cancel. It's like, well, then screw you. Take it.
Yeah.
So theoretically with an on-chain solution, right? They would still have their whatever rules they want. But once you agree to them, because it would be tied into a smart contract, they can't change the rules until it's time to renew and roll over. The rules you agree to are the rules you live by.
Right.
Right?
For whatever set period of time you agreed on.
Right.
Okay.
And then if you're talking about oracles in the feed, right? So now the oracle has this smart contract based set of rules it can call out to. So it's like, all right, I need to know, maybe it has a constant check with multiple different weather networks, right? From the National Weather Network to anybody, ideally, places that don't use the National Weather Network as a source.
Right.
So you have
so
these
it's
competing.
more decentralized,
Right. And it's like, all right, well, there's a major weather event hitting Florida.
Right.
Like
let's say a hurricane.
Let's say a hurricane, right? Because it's not like that happens. It would check. It's like, oh, there's a hurricane. All right, now it's starting to look like, all right, that might trigger an action. Like, all right, hurricane in Florida. Now let's start checking home damage reports.
Yeah.
Right? Wherever you would get those sources from.
Yeah.
Because it knows there was probably home damage. And then after it checks those, all right, let's verify that these certain things happen. All right, let's verify these things. But that's all sort of programmatic inside of a smart
contract. So it almost
contract.
seems like, you know how you have to choose a doctor that's like in network? It almost seems like, let's say like a tree fell down on your house. You would have to choose this set from this set of tree cutter downers and this set of house builder uppers.
Yeah. And that's what the oracle would have to take over. But that's you start to see how massive that starts to get.
It's a huge change.
Or you have to, well, not just a change, it's a huge ask.
Yeah.
Right now you have humans who just go do it and they do it on a case by case. I'm not auditing every tree, cutting service in the world. It's
Say
like
it, cutter downers.
The cutter downers.
Oh, thank you.
Right. I can just come to you, say what happened. That tree fell. Who'd you call to fix it? All right. And then I can go ask them for proof.
Yeah. Like either, that one wasn't approved, oh, you called your cousin Joey? No, he's not approved.
But then you're hoping I'm doing my job in your benefit, which I'm not because the insurance company pays me.
Right.
So I'm auditing.
So that's what I'm saying. Like it could be good and it could be bad.
Yeah.
Like, oh, you're saying the auditor.
I'm saying the auditor.
Yeah. Like
right now, this is one of the problems, right? The auditor, you have misaligned incentives.
Yeah.
With insurance. Their job is to collect as much money from you as possible and then give you back as little to zero money as possible.
Right.
So every time they come to examine something,
their
goal isn't to see like, all right, yep, you've hit all the boxes, we should pay you. Their goal is, how can we find a way where you didn't really check a box?
Right?
Yeah. It's like, yeah, you sort of checked the box, but you didn't really check the box. We don't got to pay you.
Right.
That's really what they're doing. So you get screwed.
Yeah.
If it was in a smart contract, with those rules laid out in a smart contract, the smart contract doesn't have an opinion.
Right. There's no like gray area.
There's no gray area. It's either, because a smart contract is just if and then statements, right? If
Numbers
this happens, then do this.
Yeah.
All right, that happened, and if that happens, then do this. There is no, if this happens, then do this, but try to find a way out of it if you can.
Yeah.
And if there was that, because this is where the transparency part comes in, you could see it up front before you agree.
And not choose that insurance.
You'd be like, well, I'm not signing up for this. There's too many opt-outs for you, so I just won't choose that.
And it's interesting because that would be another area where like smart contract auditors would come into play.
Yeah.
There would be like a whole new field of like smart contract auditors, I feel like.
It is. And now I personally have issues with some of that too, because we've just shifted the trust of the smart contract auditors. Who's saying the insurance companies aren't paying all the smart contract auditors to lie to you about what it says.
Yeah.
And so there has to be better
there's always
peer-to-peer tools that allow you to clearly read it. Like one of the reasons we use mempool, right? .explorer or mempool.space for the top of the show is it is an open source protocol. So there is a company, there's a group of individuals who run the interface that we actually use, but it's open source. So I could just download the source code for mempool.space, connect it to my node, right? Which is keeping its own copy of what's happening on the Bitcoin network.
Okay.
So I'm not trusting them anymore. And now we could be calling it off of that, and this is what my node represents.
And you're saying that Block Explorer would read your node's information only?
Yep. It would, because that's the purpose of a node, and we won't get too deep into that, right? But the node is to verify what you think.
Yeah.
And that's it.
Yeah.
So you could do the same thing with like a smart contract. You could do the same thing with Ethereum. It takes a little bit more compute power the more you start talking about auditing every smart contract, but you could do it. You could download your own copy of the Ethereum blockchain that updates based on consensus and see if it follows rules. You don't have to trust. But when you start with the Oracle, this is again the Oracle problem, those work because everything that you're theoretically reading should just be on chain. As soon as you want it to track something off chain, whether you're talking about supply chain, real estate, car deeds, insurance,
the weather,
stock, weather, betting outcomes, sport events, you have to trust whoever's putting it on chain.
Yeah.
Somebody's got to do it.
Yeah.
So the solution they have right now is, well, we won't ask somebody, we'll ask as many somebodies as possible. But there's still all this places for censorship and, you know, these trusted relationships to pop into place that you have to depend on.
Yeah.
On top of every time you fix one of those, like if you go back and check out our trilemma episode, you sort of have a similar type effect with this, because it's like, all right, how do I get as many sources as possible in a decentralized way, with minimal latency for errors, right? So you can have real time, as close to real time responses. I don't know what the third trilemma is, because I haven't thought of an Oracle trilemma myself.
Yeah, that's interesting.
But
I know. I'm like, okay, keep going.
But the more you fix, well, then there's like maybe the security issue. You can always throw in a security issue. There's a lot of them you could probably, different sets you could come up with. And the problem is still the same. Once you fix one, you've hurt the others. If I fix latency, how fast it can all respond, then I'm hurting potentially like what the truthiness of it all, the dependability of what I'm getting back, because like we've stated, like with the elections and anything else, there could be mistakes. And if I'm making fraction of a second decisions and there was a mistake, well, I've already made the commitment. Right? To find out you don't get a redo.
Right.
That's the other part of a blockchain, right? They are immutable. They don't change. So once you've made that decision, you've made that decision.
Yeah. Unless you built in like a challenge button, like football reference there.
Well, right, but now you don't have finality, right?
Yeah.
Because like if I have a challenge button and we're doing betting and you don't like the way the bet turned out because I won, you challenge.
That's right.
Well, this is the problem we tried to get away. That this all was built to get away from. But
what if the challenge was done by the Oracle? And if the Oracle is like, oh, yeah, we made a wrong call.
Who's the Oracle?
Chainlink.
Who's the? All right. Well, who's Chainlink?
Software.
So how does software, if it's truly a decentralized software with no actual...
Yeah. It reads.
Runner? Operator?
Yeah.
Well, how does it know your situation is oopsie? How does it know it didn't make a mistake? You need interventions. But that could be like... You might say like, well, we'll throw a DAO in there for challenges and all that. But then what's a DAO?
Like a board of people?
Yeah. But then it's still a board of people who are voting on whether or not they think it is or it isn't cheat.
Yeah.
And for some things that might work, but for other things, not so much. Again, go back to the insurance. Who do you think is going to be running the DAO on an insurance oracle?
Well,
the insurance company.
Big insurance.
Right. So every time you have a challenge to the insurance,
they're like,
the insurance company will be like, oh, well, we'll be fair and impartial on that.
Yeah, bet you they will.
Right. So there's a lot of these challenges.
So we have no answers, folks.
No. But this is how they work. And this was not
I know. What is the answer
to the Oracle problem. This is how they work. This is how they work.
Yes.
And if you want to do anything, I mean, there's the question of, do you want to do anything off-chain? Should you do anything off-chain? And there's going to be a large set of people who are like, no, that's not what this technology is for. I mean, literally as Satoshi wrote it, right? It was meant to be, the concept was money, right? And you need, in a digital world, you need digital money.
Yes.
Right? It makes 0 sense that we're all digital, but when I want to send you money, I have to actually go through these physical rails.
Yeah, like
and it
mail
takes
you
14 days for a transaction to settle.
Yeah.
We should just be able to do it online with a push of a button.
Yeah.
Right?
Right.
And so now you want to tie in these real world assets and you start to get these delays and these problems and things back. So maybe we just don't need that. That's not what this is for. While others are going to be like, what are you talking about? There's a strong case. Think of like real estate. The Western world is the worst place to probably look for some of this. Although I can think of multiple examples in the Western world. But now think of a nation that doesn't have solid property management rights. I'm saying all these like they're separate things, but they are and they aren't, right? So you take a country that maybe the government has, goes through a different coup every few years. So who's tracking land ownership?
Whoever is in power at that time.
And when the power shifts,
they make their own rules.
They could. And so you own property and it's been in your family for 5 generations, but the power shifts and the records are all fuzzy. And then I come along, I just happen to be the cousin of whoever's now leading the nation. I'm like, no, that's always been my land.
Yeah.
Prove it wasn't.
Right, right.
So this is where putting real world assets, if you could figure out how to do it, in a fully sort of trustless way.
Yeah.
This is where putting something like real estate on a blockchain, because you would just, I have my plot of land is mapped to my private key and I can sign.
Yeah.
You can't sign for this plot of land. I can.
Right.
So I own it.
Right.
Right. But then that introduces even more problems. Oh, every solution introduces more problems.
Every corner we turn, we get more problems.
Yeah. It's why it's called the Oracle problem, and it's been around for a very, very long time.
And here I thought we were going to solve it today, folks.
Yeah. Well, we've solved the argument of, is there no argument? There's an argument.
Yeah, that's true.
Yep. So there you have it. That's the Oracle problem, or that's how oracles work.
Yeah.
That's what the Oracle problem is. I don't know. You got more questions?
No, I think I do, but I feel that we're never going to get to the answer of them because they're not how do they work? They're how do we get the problem answered? How do we get the
problem answered? Right. So that's what we need people thinking on it for, and it's the experiments. There's the approach. I often feel like in this entire space, from Bitcoin to the shittiest of shit coins, right? Mm-hmm. Which is we put the cart in front of the horse. Yeah. I often come back. A lot of people think I'm like a Bitcoin maximalist. I'm not. I'm a Bitcoin mostimalist.
There it is.
Right. I think it's the most established of these peer-to-peer networks, but it's not perfect. Right. And I'm very interested in what a lot of these other networks are doing. Well, not a lot, but several of these other networks are doing. I think it's interesting, but they're going through a lot of challenges, right? This is what I'm saying about the cart in front of the horse. The Bitcoin community, if you accept that Bitcoin, I mean, there's not much to accept. It was the first network of its kind, right? It's the largest by market cap. It's the largest by, I believe, volume, but I could be wrong on that because Ethereum pushes a lot of volume. I'm not talking about value lock, though.
Right.
Just usage.
Right.
If you accept that premise, right, and then everybody who's got core interest in seeing Bitcoin grow, they can agree on some of the core functionality of what Bitcoin should be, right?
Right.
So we haven't figured, and all Bitcoin does, this also shouldn't be very controversial, right? All Bitcoin does is peer-to-peer money.
Right.
Right? It's a great savings, but in a peer-to-peer way. It's just
peer-to-peer
money. It solves one specific, very honed-in problem.
Yeah.
Base layer money.
Yeah.
Right? And we haven't really fully solved that yet.
Right.
There's still little sticky details. So if you're still working on that very basic one premise, how are you doing advanced lending?
Right.
Right? Using the same network. That's what I mean by putting the cart in front of the horse.
Right.
Like, you've jumped into these are interesting ideas, but if we haven't figured out how the basics of the code works, how are you doing this advanced code built off of it? Which is why you run into all these problems of speculation and whatnot.
Yeah.
And I feel that's the thing with the oracles. Like, we haven't figured out how digitally native assets work. We got NFTs. They're running through tons of issues.
Yeah.
From rug pulls to fork splits or chain splits and forking. How does that handle? And those are purely digital assets. You don't need an oracle to figure that stuff out.
Right.
And we haven't figured it out. Now you want to do that with an oracle, with the outside
Right. And
stuff.
just building on layers and layers of complexity.
Correct. And so, while a lot of this stuff is experimental, I think if people look at it that way, play with oracles. The downside with this, and why I think the crypto ecosystem gets a lot of criticism, it's the first time you've developed technology where the money front ran the technology. You'll usually have some investors who invest into an idea, let's say social media or the internet or whatever, right?
Yeah.
Those technologies usually had with very few exceptions of like high-end VCs or investment, not your general public, there was no money in it.
Right.
You had to build a product, build a user base, and then the money came. Facebook took a decade or so before it was like profitable.
Yeah.
All right. With anything crypto, you're printing money out of thin air for most of them.
And then creating.
Even with Bitcoin, when it started, it was printing money out of thin air. Like, you used energy, but the energy amount was so little.
Right.
Right. So the money is front running the technology. So people are incentivized to advance the technology because there's money in it for them, versus focus on one problem. Then you can monetize that problem as you move on to the next set of problems, right? First, you got to build the internet, then which is just computers talking to each other, then a better communication protocol layer, which is like your TCP stuff, then your security layer, before you can get to Facebook or the App Store.
Yeah.
So we're sort of doing it backwards, which is why you get a lot of the criticism, and oracles could be one of those things. So it's cool, work on it, but I think most people should probably take the viewpoint of, this is an experiment. I'm not going to dump life savings because you're going to solve the insurance problem by 2025.
Yeah.
It's probably not happening.
Yeah.
But if it does happen, cool.
Yeah.
It doesn't take a lot. $100 if you're doing an investment thesis thing, right? $100 in Bitcoin in 2011, you'd still be like a millionaire.
Yeah.
So don't put much money into it, to some of these experiments.
Yeah.
Just a couple dollars if you got it can still go a long way if it really does the things you think it's going to do.
Yeah, and then if it doesn't, you're not out of everything that you own.
Right. Right. So that is, let's get more. That is, how do oracles work? This is part of the real world assets. So this is a major driving force. There's a lot of different things. Oracles is one aspect of it. It is a key aspect of doing real world assets. But I think we're going to start doing like some mini little series type things. So we'll do a few real world asset series things, like how do oracles work, which is today, or real world assets, the stock market, and how that would look.
Ooh, I like that. Write that down.
We can dive deeper into like the whole real estate aspect and how it would work, assuming the oracle problem gets solved enough.
Yeah, we kind of covered insurance today.
Yeah. So if you have questions on any of that, hit us up.
Yeah.
Where can they hit us up at?
Well, you can hit us up on Facebook at The Blockument. We are on Twitter. Everything is at The Blockument. We're on TikTok and theblockument.com.
All right.
And YouTube.
And YouTube.
Where we're live right now.
We're live. So every time we do a live show, it'll be streamed live to YouTube. And when we don't do a live show, it'll be uploaded to YouTube when it goes live everywhere else. So
you can listen on Spotify, Android.
Oh, yeah. Spotify, Apple, anywhere you can check out podcasts, you can check us out.
Yep.
All right. So until then, come for the riches.
Stay for the revolution.
Peace.
Peace.